got Satyanarayana Raju, who's the Managing Director and CEO, with us on the show. Thank you so much for taking time out. Mr. Raju, start by talking to us about the cost of deposits. Do you think that they're at their peak or close to it? And will net interest margins hold above that 3% guidance?
No, we can't say that it is we have reached to the peak and all at this moment, because the whatever new deposits what we are procuring at market rate that is more than 7%. So when it comes for that average, whatever for meeting the requirements of the current year credit demand, we mobilize the deposits either in the form of retail term deposits or in the form of low cost deposits, CASA. But the CASA is growing because of our initiatives, but it is not in the same pace what the term deposits are going, retail term deposits are going. Retail term deposits are growing much faster than the CASA. That's why the retail term deposits are attracting a 7% average rate of interest. So when you are mobilizing majority of your resources from the retail term deposits, there is a chance that little bit upward movement may be there in the cost of deposit, which may impact on our margins.
Good to hear that. So where and when will NIMs bottom out, you think?
What we are expecting is it will be around 2.9.
Okay. And when can we expect the NIMs to bottom out? Sometime you would think in FY24 itself?
No, that depends on the liquidity availability in the system. The liquidity availability is improved in the coming months. It may not be that immediately. Otherwise, it will be in the next 2 quarters. It will be there.
So can we continue to expect deposit growth to accelerate, and would you maintain your CD ratio at 75%?
Correct. That's we have a comfort of reaching to that CD ratio at 78%. Actually, that is you can go up to that benchmark level. We have still the cushion of 3% in our system. To take that advantage of that, we were little slow in the deposit mobilization. And what the slow means, it's not the below the what we are given the guidelines. We are given the guidelines at the start of initial start financial year. We are given a guidance that at 8% we will grow in the deposits. Now we are growing at 8.66%. And whereas what we are given the growth, advances growth is 10.5, but in my interactions with the media and analysts, we confirmed that the current year credit growth will be around 12 to 13%, and we are growing at that 12%.
All right. And given that the Reserve Bank has expressed concerns on unsecured, are there any concerns that you're looking at? And, what about growth here for you?
No, actually, the concerns, whatever the expressed by the regulator, is not related to the total your unsecured exposure. Their concerns are of speed growth or fastest growth in unsecured retail portfolio. From our side, in Canara Bank, we don't have such issue. We don't have such schemes that to give unsecured loans to the non-customers or the customers who are not even a salaried class or like that. In our case, Canara Bank, our schemes are very clear that they get the customers who are salaried employees and whose salary is being credited to the Canara Bank. Only those guys will get the unsecured loans. That's why we don't see any stress in that, and our NPA in that sector is only less than 2%.
Right. And what part of your loan book is unsecured?
No, that retail book as on date is only around 8,000 crores.
Okay. Could you also tell us about your recoveries and how are you placed? What is the goal for FY24?
Yes, actually current year, the current quarter, what the cash recovery towards the book balance is almost touching the 3,000 crores in the current quarter. In addition to that, there are upgradations up to almost to 670 crores. But as against this 3,700 crores, the slippage is only at 2,900 or 3,000 crores. So we are much above than the slippages of our recovery. The current strategy that your slippages should be less than your recovery and the upgradations will continue. And in initial stages also, we are told in the current year, our recovery will be more than the slippages, and our expectation of slippage will be around 12,000 crores in a year. So our recovery will be more than that 12,000 crores.
On ECL front, there was an assessment which you were making through an external advisor. What is the report out? What does the number look like? We heard it was around 2%. Is it true?
At this moment, still the report is yet to come, and the RBI has constituted a working group. In that, Canara Bank representative also is a member in that. You can find out that's that. And we are sure with all those things, whatever we are told that 2%, it may not be beyond that.
Given there is a possibility of a decline because interest rates have picked out on NIMs, do you expect that it could have impact on your ROA as well?
No, at this moment, we say that we will maintain that return on asset will be more than 1%. The exactly number and all, let us see that the next 2 quarters. But our endeavor, our main strategy, our target is to maintain above 1%.
And tell us a little bit about your equity fundraising. Do you have any plans given that growth is strong?
See, fundraising, it is one is the capital side, another is bonds. The capital side, the CET1, we are very comfortable. And even if you look at total CRAR, we are maintaining well above 16%. Among it is better than all the peer banks. You can compare with those things. Even such a credit growth, robust credit growth, we are able to maintain more than 16% with the internal accruals only. But the board has permitted us to raise up to 7,500 crores, 3,500 crores towards the 81 bonds, and the 4,000 crores is tied to bonds. But the management, top management, we are waiting for a right opportunity. We don't want to shell higher margins because we are very conscious on the interest spending. So whenever such market conducive is there, we will come out and raise that funds. Otherwise, it's not necessary for us that immediately we have to rise because we are already well equipped with that enough CRAR. Regarding the second one is bonds rising. You might have seen that recently we are successfully raised 5,000 crores in infra bonds at very much competitive pricing of 7.54 for 10 years. And it was subscribed almost 3 times. And board has permitted us to rise up to 10,000. We have raised 5,000. The remaining 5,000 also we may rise it, because that will give us a benefit in the form of LCR, and actually these bonds, that it will not be subjected for the CRR and SLR. So effective rate will be much less than what we are paying it.
Right, and your OPEX as well has seen a very sharp rise due to staff costs too. Do you expect it to stabilize here now? Other operating costs seem to be largely steady.
No, staff cost is not increasing. It's not that the whatever any burden is there on that. We are very proactive in providing the provisions. See, our staff are their bipartite settlement is due for settlement from November 2022. So last time when the bipartite settlement has happened, the expected the incremental growth was around 14 to 15%. So by taking that as a clue for 15%, we started providing from November onwards, so 15% on every month on month. This particular quarter also we provided 345 crores. And as on date, we have provided almost 1150 crores only to meet that future. When the bipartite settlement has happened, we have to pay the arrears. That should not be a burden on any specific quarter. To meet that requirement, we are accumulating that provisions. That's why it looks that the staff cost is increasing it. The second one is the operating expenses. The operating expenses, since the beginning, our bank operating expenses are under very much control. Last 2 years, you might have seen that there is a drastic reduction in these operating expenses. That tendency will continue even in future. Maybe 2%, 3% here and there is there because we are investing heavily on the capital investment on the technology. Once you are investing in the capital expenditure on the technology, next year onwards, it may reflect in some maintenance charges, ATS charges and all. But still, we are confident that our operating expenses will be well within our control.
Appreciate your time. Thank you so much for giving us that clarity on Canara Bank.